A detailed spreadsheet filled with revenue, margin, and reinvestment assumptions may seem accurate, but can still feel lacking. A captivating pitch can leave a lasting impression while masking the essential truths that must be established. Early specialization forces individuals into the roles of storytellers or number crunchers, fostering mistrust between the two groups. When one perspective prevails, stories can become mere fantasies, or numbers may transform into tools of intimidation, stripped of human relevance. Tough decisions become problematic when emotions overshadow solid evidence, or when theoretical models eclipse practical judgment and lived experiences. Valuations devoid of narratives lack credibility, while narratives without numerical support fall short of accountability and established limits. Imagine an investor encountering a growth claim and then facing a model that fails to clarify its underlying assumptions. The investor may recall the claim, overlook the drivers, and walk away convinced that the future is guaranteed. This video will guide you in constructing, testing, quantifying, and refining business narratives through disciplined value drivers. Influenced by Aswath Damodaran's Narrative and Numbers, this channel invites you to subscribe for more insights, bridging stories and value. Stories resonate with audiences because they stimulate trust and focus in the brain, not just intellectual consensus. This connection enables synchrony between the speaker and listener, allowing communication to flow naturally and persuasively. Because stories are retained longer than mere facts, they significantly shape the beliefs that endure once details fade. When listeners become deeply engaged, skepticism diminishes, allowing inconsistencies to pass unchecked. A 19-year-old founder promised numerous blood tests from just a few drops, boasting quicker results at lower costs. Investors and partners were eager to believe in the promise, prompting essential reliability questions to arise late in the process. Stories can drive rapid action, and while this speed can be advantageous, it can also lead to hasty decisions that are ill-timed. Incorporating numbers and checkpoints introduces necessary friction, encouraging inquiries about feasibility before committing resources. This method frames storytelling as a structured craft, rather than a trance that overrides critical thought. A practical tactic is to articulate the story in plain language and then identify what evidence could potentially disprove it. Numbers inspire confidence because they suggest precision and objectivity, particularly when uncertainty complicates judgment. However, this confidence can be misleading, since biases may infiltrate data selection and the models derived from it. The abundance of modern databases can lead to information overload, distracting attention and oversimplifying decision-making. To utilize numbers effectively, data should be gathered under consistent rules, analyzed statistically, and presented clearly for thorough scrutiny. A baseball manager disregarded scouting reports and selected players based on statistics, resulting in successful teams that thrived on limited budgets. This success gained traction because the outcomes appeared scientific, despite the assumptions influencing the metrics measured. Selection bias emerges when samples are chosen to support a desired conclusion rather than accurately represent reality. Survivor bias occurs when unsuccessful cases are omitted from the dataset, creating a falsely favourable remaining record. This concept emphasises the importance of disciplined storytelling, where data serves to enhance a narrative rather than replace it. A valuable practice is to examine the data that has been left out and consider how that omission might alter the perceived trends. Every business narrative should be evaluated through 3 key filters. Is it possible, plausible, and probable? Possible means the story adheres to fundamental constraints such as market share and realistic profit margins. Plausible indicates there is evidence supporting the likelihood of the story happening, drawn from examples of similar businesses and credible links to current capabilities. Probable involves assessing the odds and translating expectations into measurable outcomes like revenues, earnings, and cash flows. An impossible story asserts that a company could surpass the entirety of its market, as if competitors disappear overnight. An implausible story leans on a series of unlikely successes, even if each individual point seems exciting on its own. An improbable story might include logical components that conflict, with assumptions about growth clashing with delivery capabilities. Running these assessments uncovers weaknesses early, preventing teams from becoming overly attached to narrative ideas that cannot be realized. After filtering the narrative, it can be revised until the operational logic aligns with the constraints identified. If this evaluation process sharpens decision-making, consider subscribing for more insights on maintaining realistic, measurable business stories. Converting a narrative into value begins with understanding intrinsic value, which is influenced by cash flows, expected growth, and associated risks. A model like discounted cash flow requires the story to outline how these driving factors will evolve over time. Value increases when existing assets yield higher cash flows, and when growth generates more advantages than the costs of reinvestment. Risk is introduced through discount rates and uncertainty, reminding decision-makers that even the most promising stories face unpredictable outcomes. A luxury car manufacturer deliberately limited production, charged premium prices, and safeguarded margins by controlling customer access. That scarcity suggested slower revenue growth, yet it fostered stable profitability because buyers were less vulnerable to economic fluctuations. This conversion revisits the narrative test, as each assertion must correspond to a driver that can be realistically estimated. If a claim cannot be articulated in terms of market size, margins, reinvestment needs, or risk, it lacks the clarity necessary for proper valuation. A simple next step involves listing 5 narrative claims and specifying the exact impact each one should have. Doing this translates discussions into concrete terms, allowing disagreements to shift from opinions to specific metrics that can be adjusted. Even a thoroughly vetted narrative will evolve, as competition, management decisions, and economic conditions are always in flux. Maintaining an open feedback loop is crucial for refining assumptions, especially when critics highlight weak connections in the narrative. Changes to the narrative can range from minor adjustments to significant overhauls, and in some cases, a complete rewrite may be necessary. Corporate news is significant, because earnings reports and key announcements can fundamentally reshape expectations, and consequently, value. In one instance, a mature company released new earnings data, and the narrative barely shifted, resulting in a stable estimated value. Conversely, an event like a scandal, product failure, or a new factory announcement can necessitate a complete rewrite of the narrative. The corporate life cycle explains that younger businesses often lean on narrative rather than extensive histories. As companies mature, numerical data becomes more significant, but effective storytelling is still vital for making sense of what those numbers reveal. It's beneficial to revisit the narrative after significant news events, documenting changes and their causes. This practice fosters learning over time, allowing future narratives to become more resilient and accurately reflect reality. The objective isn't to prioritize stories over spreadsheets. Instead, it's about mastering both to ensure decisions build trust. When narratives and numbers harmonize, optimism is grounded in constraints while realism aligns with purpose. The journey begins with a compelling narrative, which undergoes pressure testing before being translated into value drivers. These drivers morph into essential components like cash flow, growth, reinvestment, and risk factors that can be debated and refined. When data overshadows judgment, statistics and careful sampling provide protection from the false confidence that comes from biased information. Conversely, when storytelling dominates, establishing checkpoints and employing probability thinking helps refocus on the essentials. This approach minimizes whiplash, as narratives adapt to new information rather than shatter under denial. Start with a current decision, summarize the narrative in 10 lines, and pinpoint the numbers that need to validate it. Next, assess which aspects are possible, plausible and probable, adjusting until everything aligns seamlessly. To further develop your understanding, subscribe for weekly examples that demonstrate how to challenge assumptions without losing sight of the bigger picture.